All right, class. Good morning. Our next little recording here of our market update for October 5th, 2020. As of last Friday, the S&P 500 broke a 4-week losing streak where it basically trended downward every single week for the last 4 weeks. Surprisingly, last Friday, the market ended the week higher than the previous one. This is because a few factors in terms of, in my belief, overall market risk, and then also that the selling might have been a little bit overdone temporarily. A lot of companies that reported earnings did better than expected for the quarter. Um, uh, some people might find it surprising that the president's health was an issue on Friday, yet the markets were still largely positive for the week. That's really a function of, in my belief, overall risk. The fact Trump is already, from a stock market perspective, Trump for the most part is actually priced out of the market, meaning they have him at an 80% chance to lose. So him kind of leaving early, right, at the moment, not being in the White House, isn't seen as a large risk because he's already priced to leave anyway. Now, that could certainly change, going forward if things become a little bit more drastic. But right now, the president's health is not considered a market event, right? It hasn't impacted the market. In fact, today, the morning of October 5th, the S&P futures are up about 1%, meaning the market is indicated to open up close to 1% higher than it did at the close of Friday. They are saying that President Trump could be discharged from the hospital, although I don't believe that for a second. Bigger news, and this is the reason I think also why the market got a little bit of a boost last week, is it seems that there's potential for the House and the Senate to get more stimulus relief on the market. You could have also made the case that a month ago, when the market first started to dip a little bit again, that was also related to further stimulus not being passed. So as you see the House work on stimulus packages, that is an indicator that the market could go higher. The problem with stimulus packages, and I made this joke to another class, last week, is that you can give people all the money you want, but you can't force them to go to Applebee's and have margaritas, right? So you can give people money, but you can't force them to spend it or tell them where to spend it. So even when there's relief, or if there's relief for the consumer, that doesn't mean we're out of the woods yet. As you guys might have seen, there's definitely not where we were a year ago, but there's been a little bit of a surge in cases. So that is, the market's just absorbing that information. It hasn't really done much with it. Job losses, a lot of big job loss news last week. Job losses really, in my opinion, dominated the headlines, especially with Disney. Disney laid off about 30,000 workers. Airlines also laid off or are about to lay off around the same amount. The government's coming in and saying they might do a special aid package to airlines. So that's something else that could be interesting. You can debate whether the airlines should be bailed out in the first place, but really airlines are like trains, in the sense that it's part of national infrastructure. So do you really want everyone being laid off from that business? Do you really want routes being canceled? It makes travel, when it picks up, much less efficient. Lastly, last comment I'll make, because it's a pretty slow week for earnings, is that there's a higher, if the Democrats win the House and the Senate and the presidency, the market is looking at a potential for higher taxes for corporations, which, effectively could mean lower profits. So that's also a concern for the market. And then as far as earnings this week, we don't have a whole lot. We have Paychex, which is a tester for small business, Levi's, Domino's, and then Helen of Troy. And Helen of Troy makes a bunch of household products, like butter and different snacks and stuff like that. So not a whole lot in terms of market activity this week compared to weeks past. But after this week, earnings season really kicks off, and we'll have like 100 companies reporting next week compared to the handful And next quarter's earnings is going to be really interesting because it's going to show the impact of the revamping up of businesses post-COVID. So more to be seen there. Anyone have any questions? I know there's a couple students here today. Anyone have any questions before we end this? Well, if no one has any questions, then thanks for coming in the morning for the students who came optionally this morning. And then I hope you guys have a great week. And feel free to reach out if you have any questions at all.
For you as well. Thank you.
Hey, thanks.